Banking Law and Practice. Chapter 3, Customers and Account Holders. Part 3. Trustees. Meaning, a trustee manages property for a beneficiary as per a trust deed on behalf of the property owner, author/settler. Trust deed banker must study the trust deed to know the trustees' names, their powers, and who can operate the account. All trustees must sign checks unless the deed allows delegation. Any one trustee can countermand payment. No implied borrowing. A trustee cannot pledge or mortgage trust property unless the trust deed expressly permits it. No personal transfer. Trust funds must never be transferred to any trustee's personal account or used to settle personal loans. Death or lunacy. On death or insanity of a trustee, power passes to surviving trustees as per the Indian Trust Act, 1882. Lunatics. Legal position. As per Indian Lunacy Act 1912, an insane person cannot enter into valid contracts. Contracts insane periods are valid. No account opening. If the banker is aware of a customer's lunacy, they must not open an account in that person's name. Confirm first. Banker cannot stop account operations on hearsay alone. Official confirmation of lunacy is required. Honor until confirmed. Banker can honor checks and debit the account until the customer's lunacy is officially confirmed. Court receiver. After confirmation, only the court-appointed receiver can operate the lunatic's account. Joint account. If one joint holder becomes insane, operations stop until joint instruction from the receiver and solvent holder is received. Insolvents/bankrupts. Meaning, an insolvent is declared by a court as unable to pay debts. They cannot enter into any valid contract. No new account. A banker cannot open an account in the name of an insolvent person. Stop operations. On receiving the court's order of adjudication, banker immediately stops all account operations. Official receiver. After stopping, banker acts only as per the directions of the official receiver appointed by the court. Clayton's case risk. If banker does not close the account when it shows a debit balance, the rule in Clayton's case will apply. Partner insolvency. If a partner of a firm is declared insolvent, the firm dissolves and bank must stop all firm account operations. Liquidators. Meaning, a person appointed to wind up a company, realize its assets, and pay off all debts in order of legal priority. Account name. Account must be opened in the liquidator's official capacity, not in their personal name. Powers. Liquidator can borrow, draw, and endorse bills on behalf of the company without attracting personal liability. No personal transfer. Funds in the liquidator's account must never be transferred to their personal account. Banker's duty. Banker must fully understand the liquidator's powers. Merely checking the appointment order is not enough. Priority of payment. Debts are paid in strict order of priority as per the Insolvency Act or Companies Act. Local self-governing institutions. Nature. Town panchayats, municipal corporations, and city corporations are governed by a state act to serve the public. Statute study. Banker must examine the statute under which the institution was created before opening the account. Account name. Account must be in the name of the local body, not in the name of any individual office bearer. Fixed deposits. Banker can accept FDs, but they must be in the institution's name only, never any individual's name. Check. Before honoring any check, banker checks if it is drawn as per the provisions of the governing statute. Borrowing. Banker must confirm that the statute permits the institution to borrow and specifies what security can be offered. Drunkards. Legal position. A person can claim in court they were intoxicated at signing, making the contract voidable, not automatically void. Ordinary drunkenness. Mild intoxication doesn't void a contract. The person must prove they couldn't understand what they were signing. No account while drunk. Banker must not open an account when the person is visibly drunk and unable to understand the rules. Honor checks. If a drunkard presents a check, the banker must pay it before a witness. Dishonor is not allowed. No documents. Banker must not get any important document signed from a person who appears to be intoxicated. Third party. A signed instrument passed to a third party in good faith and for value is still treated as a valid instrument. Married women. Legal status. Indian Contract Act 1872 treats married women like any other adult. She can open accounts, draw checks, and enter contracts. Limitation: she may not have separate property, or her property may not be freely disposable. She cannot be declared insolvent. Husband not liable: a husband is not responsible for his wife's personal debts unless she is acting as his agent. Overdraft caution: banker should avoid extending overdraft unless the woman has sufficient, freely disposable property of her own. Hindu Succession Act, Sector 14 of Hindu Succession Act 1956 grants Hindu women absolute ownership rights over their property. Free will clause: loan agreements must include a free will clause to prevent future claims of undue influence in court. Deceased customers. Will: a will names a legal representative to manage the deceased's assets. Must be in writing, witnessed by two persons. Nomination: nominee under Sector 45ZA of Banking Regulation Act can directly claim the balance and close the account. Succession certificate: a court-issued certificate for claiming debts and securities. Payment on it is a valid legal discharge. Letter of administration: issued by a court covering money, articles, and valuables when the deceased leaves behind assets. Probate: a certified copy of the will verified by court to confirm it is the last, genuine, and effective will. Personal law: if no will or nomination exists, bank follows the personal law, Hindu, Muslim, Christian, Parsi, of the deceased. NRI definition and facilities. Meaning: a non-resident Indian NRI is an Indian citizen staying abroad for employment, business, or an uncertain duration. ITA definition: under Income Tax Act, a person absent from India for more than 181 days in a financial year is an NRI. FEMA definition: under FEMA, a person becomes NRI from the very date they leave India for foreign employment or business. Excluded: people of Nepal and Bhutan are not classified as NRIs under Indian banking or tax law. Facilities: NRIs can maintain bank accounts in India, invest in securities and property, and remit funds back to India. Account types: NRIs can open NRO, non-resident ordinary, NRI, non-resident external, and FCNR accounts in India. NRO versus NRI key differences. Currency: both NRO and NRI are in Indian rupees (INR). FCNR accounts are in foreign currency: USD, GBP, Euro, or JPY. Repatriation: NRO, transferable up to $1 million. NRI, freely transferable abroad without any limit. Taxation: NRO interest is subject to TDS, income tax in India. NRI interest is fully tax-free in India. Indian income: NRO accepts India-earned income like rent, salary, dividends. NRI does not allow Indian income to be deposited. Joint account: NRO can be held jointly with another NRI or a resident Indian. NRI can only be held with another NRI. FCNR account, only as fixed deposit for 6 months to 3 years. Both principal and interest are fully repatriable abroad. Government/ministry accounts. Role of banks: commercial banks collect direct and indirect taxes and maintain accounts for various government departments. State government, earlier handled by SBI's associate banks. Now all are merged with SBI, which handles all state transactions. Treasury officer: the treasury officer at each district/taluk issues checks on behalf of the government and liaises with the bank. Central government, public sector banks handle central government transactions via the government accounts link cell in Mumbai. Reserve Bank, RBI, is the banker to the Government of India. All central government payments ultimately flow through RBI. Project accounts: government can open project-specific accounts, e.g. Upper Krishna project, with a defined spending limit. Pension payment by banks. Authority: pension is paid based on the pension payment order, PPO, received from the Treasury via the bank's link branch. Categories: pensioners include civil servants, defense personnel, railway staff, state employees, judges, and MLAs/MLCs. Account requirement: pensioner must open a savings account in their own name only. Joint accounts are not allowed for pension credit. Monthly credit: bank credits the pension amount on the last day of each month to the pensioner's savings account. Annual visit. Pensioner must visit the bank at least once a year to personally confirm they are alive and receiving pension. Life certificate. Banks periodically require a life certificate to verify the pensioner is alive and prevent misuse of funds. Thank you. Chapter 3 Customers and Account Holders is complete. Skill development in Chapter 5. Don't forget to like, share, and subscribe to Ria's Notes.